In a few weeks, one person could cross a threshold no human being has ever crossed. This is not a prediction. We're talking about an incoming IPO. Let's start where Elon Musk's net worth stands right now, roughly $800 billion. That number already broke records. In February of this year, SpaceX completed a massive all-stock acquisition of xAI, Musk's artificial intelligence company, and that deal alone pushed his paper wealth past $800 billion for the first time in history. Nobody had ever been there before. And yet, $800 billion isn't the whole story. The story is what happens when SpaceX gets listed on the Nasdaq this June. The math changes when the world's most valuable private company finally opens its books to public investors. The math, right now, lands at $1.1 trillion. This is not a projection, not a best case scenario, but a conservative figure at SpaceX's own proposed midpoint valuation. Let's break that down piece by piece because the numbers are worth sitting with. SpaceX confidentially filed its prospectus with the SEC on April 1st, 2026. The public S1 followed in mid-May, and the roadshow was scheduled for the week of June 8th. This isn't a rumor. The company is targeting a raise of $75 billion on a proposed midpoint valuation of $1.75 trillion. To put that in perspective, Saudi Aramco's 2019 IPO was the largest in history at $29.4 billion raised. SpaceX is targeting more than double that. Musk owns roughly 42% of SpaceX. At $1.75 trillion, that single stake is worth $735 billion. Only one company and only one man's slice. $735 billion. Musk holds approximately 20% of Tesla on a fully diluted basis. Tesla's market cap currently sits at $1.3 trillion. His stake in the company he built is worth about $260 billion. That's the second largest holding, and in any other context, it would be the headline number of someone's entire career. For Musk, it's the second line on the balance sheet. The Tesla compensation package is a factor that gets less attention in the overall scheme of things, but it still matters. Tesla's board approved a performance-based stock option package for Musk that has been the subject of years of legal battles. Those battles have largely been resolved. SEC filings now place the fair value of this package at between $87 billion and $130 billion. Using the lower end of that range, call it $87 to $100 billion in additional paper wealth. Now for xAI, Neuralink, and the Boring Company. In February, SpaceX acquired xAI in an all-stock transaction. The deal valued xAI at approximately $1.25 trillion and absorbed X, formerly Twitter, in the process. Because the transaction was all stock, Musk's xAI ownership converts into SpaceX ownership, already factored into his 42% stake in SpaceX. What this means in practice, the value of xAI is now baked into the SpaceX IPO valuation. When investors price SpaceX at $1.75 trillion, they're pricing xAI's Grok AI models, its Colossus supercomputing infrastructure, and the social media platform simultaneously. And speaking about the Colossus infrastructure, just weeks ago, xAI signed a compute partnership with Anthropic. xAI's Colossus data center in Memphis, running more than 2,200,000 NVIDIA GPUs and delivering over 300 megawatts of power, is now providing compute capacity to one of the top AI labs in the world. That's a commercial revenue stream attached directly to the SpaceX ecosystem. And beyond SpaceX, Musk is the majority owner of Neuralink, the neurotechnology company. At its current $10 billion private valuation, his stake adds roughly $5 billion to his overall net worth. The Boring Company, his infrastructure and tunneling venture, has a valuation around $7 billion, and his 70% ownership adds another $5 billion. And when computing everything together, the entire stack is $735 billion from SpaceX, $260 billion from Tesla equity, roughly $100 billion from the Tesla compensation package, and $10 billion from Neuralink and the Boring Company. All in all, that's $1.105 trillion. That's before even a single share of SpaceX trades publicly, and that's before any IPO pops open. That is the floor that his net worth amounts to. Now, why is SpaceX worth $1.75 trillion? Why is a private company that has never reported public earnings being valued at this amount? The short answer is because the business actually works. For years, SpaceX was understood as Elon Musk's vanity project, a rocket company run by a billionaire who wanted to go to Mars. The financial establishment largely treated it that way. Then Starlink happened. SpaceX started launching low Earth orbit satellites in 2019, and today, Starlink has more than 4 million subscribers across 100 countries. It serves militaries, airlines, maritime operators, rural households, and disaster relief operations. It recently launched a direct-to-cell service connecting to standard mobile phones without any hardware modification. vision. It is actively displacing legacy telecom infrastructure in markets where no alternatives exist. It's still in the early innings, but Starlink is a recurring revenue subscription business generating tens of billions annually.
Of the big companies that have gone public in the past, they've generally been large state-owned enterprises with very large operations and profitability. This is a company where the market and venture capitalists have been valuing it based upon enormous potential future profitability.
And then there's the launch business itself. SpaceX launched 148 rockets in 2024. The company controls more than 60% of global orbital launch capacity. NASA is a customer, the US DoD is a customer, every major satellite operator is a customer or is being evaluated as one. The Starship heavy lift vehicle, the largest rocket ever successfully flown, has the potential to reduce the cost of reaching orbit by another order of magnitude. And now xAI is embedded in the structure. The Colossus partnership with Anthropic demonstrates commercial traction for the AI infrastructure layer. The orbital data center concept, where xAI and Anthropic are exploring gigawatt-scale compute capacity deployed in space and serviced by Starship, is the kind of infrastructure bet that could reshape the entire AI compute market. $1.75 trillion is the midpoint, and the bull case goes even higher. But what is the upside scenario and what are the real risks involved in this? Nvidia is currently valued at $3.3 trillion. Microsoft at 3.1, Apple at 3.4. If SpaceX prices its IPO closer to $2 trillion, Musk's stake climbs to $840 billion. Add Tesla and the compensation package, the total paper wealth clears $1.2 trillion. If the stock runs post-IPO to $2.38 trillion, the threshold where SpaceX would sit alongside Nvidia in terms of market cap, Musk's SpaceX stake alone hits $1 trillion, and everything else becomes surplus. And that's the upside, and now here's the honest version of the risk. All of this is paper wealth, it moves with equity markets. Tesla has seen drawdowns of 30%, 40%, even 60% at various points in its history. A broad market correction between now and the IPO pricing is a real scenario. Macro conditions in 2026 are not frictionless.
If you read the S1 in a bit of detail, the lockup agreement reads like a sieve. All of the ex-Elon float, so that's 60% roughly of the economic interest, basically is unlocked by November. 44 billion of money that needs to be raised from those passive funds to fund their participation is going to create an awful lot of damage on the top of the S&P, right? You know, all that liquidity vanishes at any kind of pressure. And if you've got all of the passive guys trying to sell 50 bips of Google,
Nvidia,
Nvidia,
Alphabet.
Who's picking up that tab?
There's also a brand dimension worth acknowledging. Musk's involvement in the current US administration has been controversial, and Tesla sales have fallen in key European markets throughout the years as consumer sentiment has shifted. So brand risk is real, boycott risk is real. Whether that translates into sustained stock price impact is a separate question. Tesla's earnings have remained resilient, but it's a variable that sits in the model. A delayed IPO is also possible. Regulatory conditions, market windows, legal challenges, any of these could push the timeline from June into fall. That doesn't break the thesis, however, it just extends it. So the question isn't whether $1.1 trillion is guaranteed. The question is whether the structure is in place to make it happen. And structurally, it is. So what is the market saying? Where do public markets land on this? See, public perception continues to indicate an 87% probability that Elon Musk crosses the $1 trillion threshold before the end of 2026. This isn't considered a fringe position. There are currently thousands of financial researchers who have spent months studying the S1, modeling the ownership math, and putting real money behind their assessments. The aggregate is 87% conviction that this happens within the calendar year. The SpaceX IPO is the trigger for all of this, and it's just a question of math at this point. At the midpoint IPO valuation, with no post-IPO premium, the arithmetic puts Musk at $1.1 trillion alone. The only scenario where this doesn't resolve in 2026 is a material market-wide correction before the IPO prices, a significant delay in the listing timeline, or a simultaneous and steep decline in Tesla's market cap. Any one of those could happen. The combination of all three in the next 30 to 60 days is what the market is pricing at 13%, whereas the 87% consensus is a risk-adjusted read. For decades, a trillionaire Trillionaire was a thought experiment, the kind of number that shows up in "What if Rockefeller were alive today" articles. Something to debate at dinner or provide hypotheticals, not model in a spreadsheet like we are doing right now, because now it's a NASDAQ ticker and the June Roadshow. The overall structure underpinning these concepts is what matters, because it doesn't look like anything that came beforehand. Rockefeller's wealth came from controlling a commodity, Carnegie built steel, Bezos built a platform. What Musk built is different. SpaceX dominates the infrastructure of getting to space, of internet connectivity and underserved markets. XAI is building the physical infrastructure of AI computation. Tesla is vertically integrated in energy and transportation, and these aren't separate at all. They're interdependent systems. This is just a headline, the Trillionaire milestone. The deeper story is what it reveals about how concentrated wealth generation has become in the era of deep tech infrastructure. One person, multiple monopolies, all converging on a single liquidity event. All these markets saw the math before most headlines did, and the S1 confirmed it. And that's what we at Sagan here do. We follow the fundamentals that move markets before the broader narrative catches up. Follow Sagan Research to stay ahead of the story, and watch our other videos to learn more about geopolitical events.